So like, again, the first and third week of the month, I'm going to try and, well, not try it. It's on the agenda, like 6 p.m. Central Time. And then the second and fourth week of the month, it's going to be like this. It's like Friday at 3 p.m. Central. So I'm just trying to make sure that I can hit everybody's time schedule, because everyone has different, like David just said, he's got kids, he's in the pickup line, like, yeah, I've got two little ones. Some people are working, some people, who knows? I just want to see how I can hit everybody and be as accommodating to everyone's schedule as I possibly can. So before we jump in, I don't have like a massive agenda today. I really wanted to just have some dialogue on where everyone is with what's going on. I'll have to, I'm really excited. Here's everybody that's coming to the event next week. We've got these awesome Padfolios that, and we've got some more swag that everyone's going to get when they actually get there. So it's going to be really cool. We're just super pumped. Like Zane and I we were in the office for like the last hour, just like basically setting up the final, all the final agendas for everything. It's going to be badass. And we're just really pumped to have everybody in person if you can make it. So that's enough of that. What's been going on? Does anybody have kind of anything in their pipeline? Questions, thoughts? We got a couple people that are new on here. Really excited to have everybody. I'm just so pumped that we're growing this community, because Zane and I were on a call yesterday afternoon with a group. I'm not sure if they're on here or not, but like a massive amount of capital that are just salivating to invest in our deals. And so we haven't finalized all the details yet, of course, but they're just like, we are ready to rock and roll. So just know that, like, when you guys are working to find those opportunities in those buildings, just know that the capital is ready to be injected. Like, we are ready to deploy cash. It's just going to come down to all of us busting it and turn over those rocks to find those deals. So Zane, do you have anything else kind of on your mind before we kind of jump in and start dialoguing with everybody?
Yeah, I mean, I think one thing that I touch on a lot with like all of our members when I get on these weekly calls that I find it really interesting is just how phenomenally common it is to make like a lowball offer or make some kind of crazy offer that people don't expect the seller to accept, and how often and common it is for them to actually come back and start negotiating and accepting it. And it's crazy because like another member just got another LOI accepted like this morning or yesterday. I forgot which one it was, down in Florida. And it was to leave 25% in the deal, and at a price that matches at a 12 cap, right? So like,
Yeah.
it's so much more possible than a lot of people expect when they come in here and saying like, I don't know if they're going to take my lowball offer. I don't know if they're going to accept to leave money in the deal. It's so much more common. And the worst thing that you could possibly do is just simply not make an offer. The best thing that you could do is make the freaking offer.
Yeah. Yeah. 100%. And it goes, and we can open this up for like questions, thoughts as we kind of go along, and I'll share my screen here in a minute on thoughts or questions or whatever's on everyone's mind. But what Zane is talking about that we've discovered, at least in my own style of investing, is most of the time, if someone is not motivated, they're never going to want to do a deal with you. It's just like, hey, they don't have anywhere to be. They're not divorcing. They're not dying. There's not dissolution between them and a business partner. When that doesn't happen, you're most likely not going to get the best deal. And if you offer right now on something that makes sense to you and they tell you to kick rocks, well, whatever, like, lick your wounds. And it's really not even a big deal. It's not emotional anyway. You've done the math. But who's to say in 2 years from now, they're not divorcing, they're not dying, they're not dissolutioning? Like, you just never know. And I think that's where, when you get confidence in your offer, you back into your financial metrics and say, I'm willing to die on this hill that these are the math attributes that I need to either do a deal or not. What ends up happening is it creates confidence in yourself. Your broker is going to know, like, hey, look, seller, like, this is just where we're at and we're willing to walk away. He's developed confidence in you. And then when you actually do have that deal and it goes under contract, you have the ability to close it because you've got our team to help hold your hand and actually get the deal across the finish line. So don't get discouraged if you've got like I hate the word discouraged too, but if you are working it and you back into the math on a $3 million building and they're offering at a 7.2 cap rate, and you say, man, this is a great physical attribute building, yet I just feel really awkward about offering at, they're asking 3.1 million. I feel weird offering 1.99. I feel weird. You got to get over your emotion. This is not directed at anybody. This is more directed at myself because I was that guy. But man, if you can just say, look, this is what my math says. This is what the current lease says. This is the structure of the lease. This is the runway of it. This is the location of the property. This is how my banker and my team will finance this deal at this number. Bam, make the offer, and then go find the next building and make the offer. Because like I said, you make 50 offers, you're probably, the math says you'll probably get 3 of those accepted. So if you find the physical attribute building that makes sense, and then you reverse engineer to the financial metrics and you make those offers, you're guaranteed, as close as guaranteed you could possibly be, guaranteed to have at least 3 buildings of 50 offers under contract. So that's kind of the philosophical, rah-rah out of the gate. But we've just discovered that we're just making offers on stuff. And like Zane said, like, people are like, damn, that's a pretty good deal, especially when you position them why it makes so much sense for capital gains and taxes, and you show them like why it's a no-brainer. And it just ends up creating this compounding confidence. And you're like, dude, I can do this. Like, I can do this in multiple buildings at once, So that's my 2 cents, I guess. So, let's open it up. What's on everyone's mind? What's been happening? Questions, thoughts. I'll share my screen. We can go over a property or some metrics and everything, and we can start chopping it from there. Anybody?
Yeah, I guess just a comment from my side. This is Brett. Hey everyone. I came into a situation I guess it was a couple weeks ago where I was trying to get someone to let's say accept seller financing. I realized after looking at their, let's say, what they bought the property for originally, after the amortization, uh, I was offering lower than what, or sorry, higher than what they bought the property for originally. So seller financing really doesn't provide the benefit, I think, that we've talked about in this call a lot, but it does provide a benefit on interest rates, like interest, right? Just paying interest on someone's money, which may be more than what they could get at a financial institution or something. So if you're ever in that situation, doesn't mean that they shouldn't do it. But it's just up to I guess, the interest rate that you negotiate with the seller, and if they're willing to do that. So don't get discouraged if you see that. Just there still is a benefit out there as well for a situation like that.
No, 100%, Brett. And I think on top of that, let's just walk through. Let me just pull this up real quick. Like what this looks like for those that are maybe like newer, what kind of the seller financing portion kind of looks like. So on a property that, this is like another building, for example, but in this case, on a property, let's say, I bought this for those that are actually going to be at the event next week. This Jefferson building, we're actually going to walk this property. So you'll get a chance to actually see this one in person. Like we'll walk inside of it and everything will be really good. You might even meet my tenant if they're working on the weekend. We'll see. But what that means, I'll show you what I did on this property. So just so we're all on the same page, bought this building for 1.1 million. It's like closer to 27 and some change. That's not the point. And I got a mortgage from the bank for 80%. And this is not near, it was basically like $210,000 of equity. I've increased this. But what this actually shows is that, and if you all have your calculator like pulled up, you can figure this out too, to follow along with these metrics. But what that second position mortgage does is, again, on the HUD statement, you'll see that there is a mortgage of 800 grand from the bank, and then a seller leaving money in the deal. So Zane and I were just talking about this, I mean, like 10 minutes ago. And to be very clear, imagine that you go to closing. The way a normal closing happens, just so we're all on the same page on how this works. A normal closing, let's say it's $1 million property. The bank said, yes, we will finance you 75% loan to value. So we'll finance you $750,000 of the value of the property. So $750,000 check. Usually, in 95% of transactions happen this way. The bank wires $750,000 to the title company. You as the investor, and we can even take a couple zeros off. I mean, imagine if it was $10,000 property. The bank wired $7,500 and you brought $2,500 to that deal, right? Like that's more maybe a residential property. You add a couple more zeros. You usually are the ones wiring that remaining 25%. That's the equity that you are injecting into the deal. So at the time the title company does all the homework, they say, okay, yep, there's been $1 million wired here today. After the mortgage is paid off, the seller walks with whatever is remaining. That's his capital gain, right? We all maybe are following that. In a seller financing piece, everything is the same except the bank will wire the $750,000 to the deal, and instead of you bringing $250,000 to the deal, the seller just does not receive that extra $250,000 at closing. So he still gets a check for $750,000. He would have otherwise got a check for $1 million. In this case, he's getting a check for $750,000. The bank then puts a lien on the $1 million building, a first position mortgage on that property. And then the seller, because he didn't receive the $250,000 at closing, he left it in the deal. There's a mortgage of $750,000 and there's a mortgage of $250,000 on the credit side of a HUD statement. And what that will just show essentially is that there's $1 million of debt on $1 million purchase. So you got 100% debt. You own the property, you own it 100% equity yourself, but you have none of your own money in the deal. You're using other people's money to close that deal. And so what that will do to your cash on cash, obviously, it's infinite because you have none of your money. Maybe you put $10,000 of earnest money in or whatever. But what ends up happening is when you have none of your own cash, even though your cash return, your cash flow goes down. So in this case, let's just look at this building. Sold off $11,000 a month. Like I said, I have this building. My debt service is a little bit more than that. Yeah, it's closer to like 8.25. So I think it's like just over 7,000 a month. But yeah, just at 90,000 bucks. So that's my debt service annually on this property to my bank. So I'm basically paying, I'm bringing in 130 grand on this building. My debt service is 90. So I've got 30 grand of free cash basically out of the gate. But then I service debt to my seller. It was like 210,000 bucks at, it was 5%. So whatever that number is. So yeah, so basically 10 grand. So basically what that means is that my cash flow is 40,000 minus this 10,000, meaning that I'm bringing in $31,000 a year of net cash flow. So I don't have any of my own money in the deal. So you basically take this number, 31 grand, and you divide it by what I put in it, which was $0. And now it's an infinite return on cash. So that's really where it can get cool. So even though your cash flow might be smaller, your cash on cash return goes up, which is really the metric that, in my opinion, is the hill that I'm willing to die on. That's the most important piece and thing that I care about the most is how can I have no money in deals? Because again, I mean, you want to get philosophical, you start introducing depreciation, and on that one building, it's $180,000 of passive loss on that property. So you do that once or twice. If you're an engineer in this group and you're making 180 grand and you got to send 60,000 of it to Uncle Sam, you can just wipe out your taxable income and get a refund of 60 grand just by doing one deal. So when I always joke and say you're one triple net lease away, you are one triple net lease away from getting this massive refund plus all of that cash flow with none of your own money. So that's just an example of a property that, again, those that are coming in town next week, you'll get a chance to actually like physically walk this property in this building. But this is where it can get really cool. And I'll show you what this mortgage looks like so you can get your eyes on it as well. And I've got an attorney that will draft these. It's pretty simple. Let's see here. Second mortgage. Here we go. So move everybody over. And again, if you ever need me to share a document or anything with you, I'll do it. It doesn't, it's no big deal. Yeah, he left 300,000 in the deal. So it wasn't even 210. It was more than that. So my mortgage was less to my bank. So what you're getting at, what you guys can see here is that like it's very, very cut and dry. I think it's 36 months. I signed this is like a year ago, so I don't remember exactly what this document looks like, but yeah, I had the attorney draft this whole thing up, signed by I haven't signed this one, of course, but all this stuff is September of 2023. So this was like literally last year. So, but yeah, we have attorneys that can draft this stuff for you, and it's just I put in front of them our seller financing calculator. And I just basically went in front of him and say, hey, look, guy, this is what makes sense. Like you should consider this. And he went to his accountant. His accountant was like, hey, because I offered him 200,000 to leave in the deal. He asked if he can leave 300. And so these numbers are a little off, but everyone gets the picture. What questions or thoughts do you have, at least on this one? Or we can always just jump to the next question or thought. Yeah, go ahead.
Question. What's the status on this deal now? What's up with this one?
Well, what we're doing right now is I'm thinking about just selling it. I've got a couple. This is maybe a little game within the game, but starting to get some ideas that at the end of the year, everybody understands you make some money, you got to pay Uncle Sam. You got two options. You could either pay the tax or you can go buy something. That's why you get like all these massive, corporate jet sales on December 27th. It's because people are just trying to spend money on something versus just giving it to Uncle Sam. And so I've got some offers right now to buy this building for me. And yeah, I'm going to have to pay some taxes if I sold it. But then again, a little game within the game. I was actually with my banker yesterday. We had some Modelo's and we're just chopping it up because we're closing a deal next week too. And one thing that he says is like, when you go and you do seller financing, you get cute with terms. He's like, sometimes it can rub, the CEO, not the wrong way, but just like, hey, this guy always wanted to do creative finance. How come he never wants to bring money? Like whatever. Guy's an older guy that's about to retire, thankfully, from this bank. But what he told me is if you go and borrow money and then you pay him off, and then you borrow money, you pay him off, and then you borrow money, and then you just service days. Like everybody does it like that. Their mind is super. It's like a goldfish. Like if you just do what you're gonna do, and you say you're gonna do it, they'll basically bend over backwards for you. So that's when he was like yesterday. He was like, "Hey, we do this one. We've got serious capacity to work with you." So that's why as we're sitting here talking with everybody here, it's like there's way more capacity for buildings as we're going down the road because this one bank is like, dude, we will lend you, like they'd give me like a $60 million capacity. So it's like, if you got deals because we trust you as a borrower. I was talking to somebody, might have been Caleb if he's on here. We were talking last night, actually like last night he was driving back from somewhere, a guy in our group. And if you can distill it down to like one idea, like when the bank is lending you money, when they have money that comes in, they want to figure out who is our least riskiest borrower. How can I lend money to somebody that's not a risk? And the way you create low risk in the bank's eyes is by purchasing consistent, predictable income producing real estate. Meaning you buy our style of real estate that we talk about, the 10 to 40,000 foot, ceiling heights, roll up doors, distance from highway. You buy that style of real estate, that creates consistency, which when you buy that property, that also creates predictable style of tenancy. You have blue collar distribution, fabrication, supply, contractors, roofers. You have consistent, predictable style of tenants, which creates consistent, predictable styles of income. Meaning you de-risk the deal in the bank size. So when they have an influx of cash from the Fed, the first person that they want to call is you, because you continue to buy consistent, predictable, cash flowing assets. And they're not in the real estate ownership business, they're in the lending business. They want us to own real estate and they just want to lend us the money. And if we can reduce the risk in the bank size, they will hand us the keys to the Mercedes. So that's what, if I could distill that down, that's kind of the conversation that I had yesterday with my banker. So anybody have thoughts or questions kind of on any underwriting, any real estate deals or questions or problems that they're working through, thoughts that I can help them as they're moving along down the field? Like, anybody have anything in particular on their mind that I can work through? I can give you guys like a little heads up of what we're working on. Everyone will get one of these. This is basically, I don't want to spoil it. Zane probably is going to be upset that I'm spoiling it, but we've just got a lot in store for everyone next week. And when you get in person, it's going to be so badass. And we're going to be working through, a deal like this. Everything is color coded. We got all of these guys on this panel that are going to be there to help walk through the deal, working through all the actual property, working through all these metrics and ratios. It's going to be really, really good. And I'm just really excited to see everybody in person too. So yeah, I'm pumped up. So, but again, sorry to sidetrack. Does anybody have, again, a thought or question? How can I help somebody on where they are, or Zane or I, or questions for the group?
I got a question, Nolan. So I have this building that I'm looking into. It's already sitting at a 9 cap rate with the listing price. But I need the lease info and I can't get it. We keep reaching out to the agent who has it listed. He says, "Oh, I was supposed to get it yesterday afternoon." Nothing came. I haven't gotten anything all day today. What does that mean anything to you? Like they're not interested, or is there another way I can approach it to try and get these numbers?
All right, let's just do this quickly. Do you have some of the numbers in front of you, Zach?
Let me see if I can pull it up quick.
Because my thought is when someone doesn't have the lease, or so let me ask you, Zach, is the broker are they representing you, or are they representing the seller?
So my broker has reached out to the seller's broker trying to
Okay.
get that information, and I've been copied in on the emails, and they're like, "Yep, we'll get it to you later
Yeah.
in the afternoon," and that was yesterday. Nothing.
I would say that's not uncommon, meaning residential is just different than commercial, meaning like residential stuff moves like really quickly. Commercial, I feel like you get some closing dates from 60 days from under contract. It just takes longer to close. But also too, I wonder if the broker, well, let me ask you one more question then. The broker that's representing you, how close are you to that guy?
Not real close. He was actually referred to me from another agent that I am close with, because I'm from Wisconsin. He can't deal, and this one's in Minnesota. So
Did the guy that's representing you bring you the deal from the he did? Okay, well, that's okay
yep,
then. All right.
yep.
Because
I'm
sometimes
gonna,
those sellers are just like upset because they're like, well, I'm just cutting my commission in half. And so they're almost like de-incentivized, sadly, like kind of de-incentivized to want to work for you, because they were going to earn on $1 million building, they were going to earn 60 grand. Now they're earning 30,
yeah,
So it's unfortunate. They're still making money. Like 50% of something's better than 100% of nothing. But,
right.
sometimes that's how it goes.
Did you want me to share my screen, or did you
Sure.
want to see
Yeah,
the pro forma on it, or
sure.
Okay.
Yeah. Let's do it. Let's do this. See if that works. See if you can do that now.
All right. Let's see here.
Just a question. I mean, do you need the lease to draw up the numbers or no?
Yeah.
Yeah, I want to, because I want to reverse engineer my way back into it. So I think it's this one.
Do you at least know how many years are left on the lease from the listing or anything like that?
No.
Yeah. The way that I look at it is, I mean,
Can you see it?
we can see it. Yeah. 100%. Yeah.
Okay. So I mean, I just been playing around with this number here because I don't know it, but it's listed at 2.3. You know, I'm just playing around with numbers here, waiting on, you know, extra info. So
But you have the asking cap rate, right?
Yeah. Go ahead.
He gave you that, right? So you can,
yeah, but I want, like, yeah, I'm getting to the point where I want to make an offer, but I have no idea what's left on the lease, you know, how much time's left on it or anything.
Does it,
So
do you know if it's triple net or double or single or?
nothing. I don't know.
Interesting. That's odd to me when guys are not wanting to communicate. That's
Right. It's like,
because
I,
what that does, if I'm being straight up with you, Zach, it's like I mentioned before, that's when when I'm not sniffing some motivation, because if someone's motivated, if someone is divorcing in 30 days and they've got to sell something, you bet that they will call you back 2 seconds if they were on the other line. Like they're calling you back, hey, what's up? Like, what can I do? But if they have nowhere to be, they'll get to you when they get to you. So
Mhm.
I would be curious to know why this guy is selling, like understand his why, his underlying intrinsic reasoning behind selling. Because if they're just being passive about getting to you, man, I'll be honest, I would just kind of like call that dude, say, hey man, we've got limits, we got some funds that we're about to deploy. Call me back this afternoon if you've got with that lease. If you don't, no big deal, man. We'll just part ways as friends. And I'm gonna go throw this other 4 million. You come up with a number, like a ridiculous number. We're gonna go
Right.
throw this other cash and something else. Like no biggie. Thanks, homie. And just
Sure.
peace out on them. And usually they'll call you back. Or if they don't, then you knew that you made the right move, as they're just not motivated, you know? And
Yeah.
that's a blessing in disguise sometimes. You just don't have to, you don't want to waste your time with somebody that's like either nickeling and diming you, or they are um, just not motivated to sell. Like they just don't have like a strong reason to sell. Like, like I said, I was with my banker yesterday and he was like, would you sell that Jefferson building? I was like, well, I'd sell it. Sure. I'm not motivated to sell, but everything is always for sale. Everything's for sale, right? You buy
Right.
something for $1 million and someone turns over and say, I'll pay you $4 million. I'd be like, yeah, I'll sell it for $4 million, no problem. But unless somebody comes up with something crazy, then I'm just maybe not really wanting to trade. Maybe that's another reason why, where we're thinking about doing something creative and the seller's like, man, I just don't want to deal with this. And that's okay. Like it's not right or wrong. But that's where, if we don't have the right motivation, it's like barking up the wrong tree. You know what I mean? It doesn't work,
Right.
So
I had a deal like that, and what I found out was the broker was trying to keep it in house because he had somebody that he was wanting to sell it direct. So he wasn't answering any questions or giving us any information. I had to go over his head and find the owner and contact the owner directly.
Sure.
that's so annoying, because then they've got interior, like, and that's a little I'm not gonna say that's illegal because I'm not getting philosophical, but like
Ethics.
when they're literally not being a fiduciary. And what that will do, though, if that seller heard that broker would I would never hire a guy like that again.
That owner had no idea this was going on, and it was like 2 or 3 weeks that we were trying to get information, and they were just ignoring us. So that seller had no idea this was going on.
Jeez.
Damn.
Well, that's happened sometimes, and it's sadly not uncommon, but it's reality, I guess. It happens that way.
I got a question. I'm new and glad to be here.
Bruce, hey man, it's great to meet you, man.
How you
It's
doing?
glad to have you.
Nice to meet you.
Awesome.
Great to meet all you guys. On your Jefferson property, you just mentioned about potentially selling it. After just purchasing it and doing an accelerated depreciation on it, isn't that going to create some unnecessary taxes for you?
Oh yeah, it definitely would. It would thankfully when you recapture depreciation, it's imagine without getting into the I'm not an accountant, but from my accountant's perspective, basically if you can imagine it's like you pay the capital gains and then accelerated depreciation and then you recapture it. That recaptures about 20% like a capital gain, like long-term capital gains. So if you can find a way to, it depends upon every situation. And that's where the 1031 comes into play because you don't have to recapture it if you kick the can down the road. But I've discovered, like with my account, if the math makes sense to where you can sell it for a high enough price where you pay the taxes, you recapture some depreciation, and then you're able to pay off a mortgage. And it just depends upon what you're trying to accomplish. So usually what I try and do to answer your question, Bruce, is if I'm ever selling something, I want to make sure that I have already purchased. If I bought, like, let's say I bought this for $1.1 million and I'm going to sell it for $1.5 million, hypothetically. So after commissions, let's say that I'm going to roll with like 300 grand of capital gains, and I get my 200,000 if I got to pay him back. So I'm rolling like 300,000 in capital gains. What I have strategized during the year is, okay, I need to make sure that I buy a $2 million building somewhere that is going to throw off at least $300,000 of bonus depreciation to where I can offset my sale, if that makes sense, without having a 1031. So I'm trying to strategize earlier on, like, hey, if I'm going to sell this property, I need to be looking forward about buying another building with at least enough depreciation to offset my capital gain from the property that I just sold. Does that answer your question? 30,000 feet?
Yeah, that makes sense.
Yeah. It doesn't happen every time. Again, the timing is everything on stuff, but usually if you can do it within the year, especially, it can usually wipe it out if you structure it right, properly. Great
Sure.
question too. That's a great question.
Oh, thanks.
Nobody likes to pay Uncle Sam.
Yeah,
Nobody. Yeah.
I
So
agree.
Keep that money in your pocket.
yes, 100%. What else is everybody up to? Anybody else have anything else going on? What's happening?
I got a question, Nolan.
Yeah, man.
Can you go over like a sale leaseback a little bit? I was talking to Zane a little bit about it, just maybe like, I guess how common it is. Is it still common that they'll be fine leaving money in the deal, like seller financing? Just any information.
Yeah, let me do this. Let me see. Sale lease back. I want to say I put something on school. It was probably a couple of months ago. Let me pull this up real quick. I'll share my screen here. Oops. Zach, can you change me? Can you, oh, never mind. I can reclaim the host. Sorry. I put something a couple of months ago from my guy, Sam Zoldak. He sent me a really great article. Here it is. Oh yeah, here it is. Okay, let me show you guys something. So I'll put this PDF back on the top of can you guys see this? I want to make sure I'm reclaiming this correctly. Okay.
Yes.
Okay, cool. So this is from my guy Sam Zoldak, who's like my main broker. He's always sending me these deals. And so I'll put this back on school so everyone can have this. I'll just upload this. But sale leaseback. So let me ask you this, Griffin. Like what I can go over this from 30,000 feet. I can dial in the details. Like what's on your mind so I can answer your question. And then if anybody else has a question about these leasebacks on how and why they work. Do you have something particular on your mind, Griffin?
Main question would be, does it still make sense for them to do seller financing? And then is this a scenario where you would be doing two separate offers or same type of offer? anything to look out for in seller leaseback?
Okay, good question. So number one, so for those that have not done one of these or that are still learning about this, a sale leaseback is very simple. It's a owner user, somebody that is in the contracting business, and 20 years ago they purchased the building because their accountant told them to do it. It was a good idea. They've owned their building. They've been using their building for their property. Me, you as investors, we come along and say, hey, look, instead of you paying principal and interest and having all this money tied up in your building, you might be able to utilize some liquidity to increase revenue in your business. Because again, most of these contractors or fabricators or supplies or whoever that they are, they're usually really good and experts at their niche business. They're not real estate guys. And for whatever reason, however long ago it might have been, it could have been short, it could have been long ago, someone told them that buying real estate was a good move. And it is a great move for us, but we're just not in the same trade business that they might be in. And so what we can offer them is say, hey, look, how about this? We can kill two birds with one stone. You can continue to run your business with full capacity and efficiency. I'll write you a check for some liquidity so you maybe can purchase some equipment, pay off some debt that you might have, go hire some more people, do something more efficient with your business. And then you can rent the building back from me. That's a sale lease back to the purchaser of that property. And so for in this case, it's a true win-win, because think about it this way. The tenant slash owner user that was in that space has a perfect building for the style of business that they are in. So, I mean, it's like a basketball player being like, I'm almost coming up with this, like being on the football field, it doesn't make sense for a basketball player. But if a basketball player is like, hey, this is awesome, this is a regulation size court, perfect. How about this? We buy the court from you and you just come and rent from us every day while you're practicing on it. Perfect. That's exactly what I want. I'm looking to rent a space like this because this is exactly the type of court that I use, right? That was a bad example, but you get what I'm saying. So we're essentially giving this tenant or this owner a massive liquidity hit. They lease the building back from 10 years so they can run their business. And then they pay us rent. So we've got a great long-term lease with a great tenant, somebody that's utilizing the space as efficiently as they can. They can be more efficient with their cash flow because they have a liquidity event. And then I like it as just a relationship play. I've got a chance to work with somebody that's been in business and is not going anywhere. So I guess to answer your question, Griffin, that's the overview on sale leasebacks and how and why they work. And like I said, I'll put this in I'll put this back in school so everyone can get their eyes on this, but it gives a really good detail of all the benefits of a sale leaseback versus some very small drawbacks. So Griffin, were you asking, does it make sense for the seller to leave money in the deal in that case?
Yeah, do you think they'd still want to do that then?
Well, I think when it's positioned properly, leaving money in any deal always makes sense. It's a massive tax move. It's a huge tax move. And one thing that I've been really focusing on that when you guys get there, if you haven't done it already, we got a couple people that have, but when you do have that opportunity to offer the seller to leave money in the deal and then they still have a capital gain problem, we've anybody that's coming to a live event next week, you'll meet my main guy that's doing this. He's like a 1031 broker. And so what I do on top of not just showing them how to leave money in the deal where they can earn interest, but also provide them a source or a 1031 broker expert to help them pay zero in taxes. So I think leaving money in the deal for any seller is a no-brainer because they can say all they want that like, oh, I just want to go drink Mai Tais on the beach. But fact is that when you go sell a property, like I've experienced it with one of my sellers who I actually wrote a check for, man, dude, he was like 60 something. He's like, man, now it's just a race against time now. Like I've got a war chest of $2 million, which is cool. My wife and I are like, again, they're drinking Coronas, but man, it's a race against time for them. And they just hoping that they're outliving their money. So man, I would challenge you or anybody to find a better solution than a seller that can get a massive liquidity hit out of the gate. They reduce their taxable income, and all that extra cash that they didn't invest in their business, that we provide them with a 1031 broker so they pay no taxes. So I'm thinking if I can find myself as a seller consultant, which we talk about, you're going to create a great relationship with that tenant and that owner user anyway. If that answers your question. Zane, do you have a thought on that?
No, that's good. And I mean, I was actually just having a conversation this past, maybe last week with one of our members who had that. I'm trying to think of the exact situation, but the seller specifically mentioned that they were trying to 1031 into something else. And we were like, dude, we could totally figure out a solution for that. We even know a guy, right, Nolan, who has he specializes in 1031 exchanges.
That's what I'm saying. That's what I'm talking about. I'm saying like that guy, we can provide you with him, and that guy will literally come on board on that deal and help your seller just pay no money in taxes, like at all.
Can I jump in here real quick and ask a question on that?
Yes.
On that seller financing issue, where the seller's saving capital gains tax, let's say he leaves money in the deal. He saves money that year, and then he gets, when he does get the remaining, he's paying it then. It's just kind of prolonging,
right,
pushing out when he has to pay it.
Yeah, you're hoping the whole move with this, the whole move with the seller leaving money in the deal is, number one, it's going to help your seller alleviate taxes today. That's the number one goal, because he's not receiving as much capital gains in this particular year. He's going to receive interest payments for the next 36 to 60 months before that balloon hits. But then in the future, we hope, again, I'm not an accountant, I'm just, talking with my own accountant, he'll receive that lump sum in the future at potentially a lower taxable income bracket. So he'll have a smaller capital gain, hopefully, right? Again, I'm not an accountant. But also what it does for you is it allows you to have some creativity to increase value on the building. So if you bought it right, we buy it in our metrics, the rents increase over the next 3 years or 5 years, you might have 15% rental increases, which means the value of the building is going to go up. Maybe interest rates, you can buy the rate down, you can get creative, but you can borrow out, again, on $1 million property, you need $250,000. You can borrow out another $250,000 to pay off your seller, and you're still in that building for no money.
Yeah.
So that's really the game. And then you still own it, you still cash flow it, and you still have all that depreciation deduction.
Good.
100%. And I just put that, if you guys notice, I just put this, that attachment in school. So when you see this thing pop up, like, you can read through that doc that I was just running through. It's really good. Again, it's kind of high level, but you'll get a much better idea and understanding of like what these are and how they're so beneficial to the seller and the buyer.
So I've got a, I'm Matthew, by the way. I'm also kind of new here. Can you hear me?
Matthew, hey man.
I've got a question about the seller leaseback thing. So they're selling the building to kind of take out some of the equity that they've owned.
Yep.
Does that count as revenue, like for their business? Like if they're going to buy equipment or whatever, like would that be considered a tax write-off for their capital gains?
Well, obviously with their, I'm not an accountant, so that's my biggest disclosure. But I think the biggest kicker is they can take those capital gains, and you can't really exchange that money to go buy equipment, but you can depreciate that equipment. So they're gonna have to, if they make $500,000 in capital gains tax, they might be able to go buy a $500,000 tractor and depreciate 300,000 of it, because it's probably the depreciation is going to be a lot shorter than a building. So let's say that they get 300,000 of depreciation on that tractor that they just purchased. Well, now they're only exposed to $200,000 of capital gains, long-term capital gains, because they earned 500, they bought a tractor, 300,000 of depreciation. Now you're left with 200 grand. So maybe they take another that 200,000 or whatever it would be, and just find a way to go buy something to find an offset. But it doesn't affect their business income. It's a capital gain, not an earned income or a 1099 revenue stream.
That makes sense.
So they're two different. That's a different style of income. That's more of a like a, what do they say? Active income, portfolio income, and passive income. Capital gains is more of a portfolio income where you buy low and sell high. Like active income is trading our time for money. We go to our 1099 or W-2, we work it, we earn a salary or a commission. And then passive income is rental real estate. So usually buying low and selling high, that capital gain, whether it's the stocks or whether it's real estate, that is a long-term, short-term capital gain purchase that's taxed differently than how our W-2 or our 2-week 1099 is taxed. That makes sense.
It does.
There's a great book too, Matthew. I don't have it in front of me. I wish I had it. I'll pull it up real quick so everyone can see it. If you haven't read this book, it's called Tax-Free Wealth by Tom Wheelwright. Has anybody read this by chance? Has anybody got a chance to read this? If you have, awesome. If you haven't, you haven't. I own this book. And Tax-Free Wealth by Tom Wheelwright. He's Tom Wheelwright, and this is not even the book that I own. It's got his face on it and stuff. But he here it is. This is the one that I have. So Tom Wheelwright is Robert Kiyosaki's accountant, who wrote the book Rich Dad Poor Dad. And if this is an awesome book. And it sounds funny because you're like, oh, the last thing I want to read about is taxes. This dude basically makes it so simple. Like I went to public school and I understand it, and I was excited about learning about it. Like it was really, really awesome. I don't know where it is.
Hey, Nolan, he has a podcast. I think you turned me on to him.
Yeah, Wealthability.
Yes, and he makes it so simple and gives like specific subjects that he goes over with guests. It's awesome.
Let me show you what this is called. Wealthability.
Yeah.
Here it is. This is Tom Wheelwright. So Wealthability podcast, Tom Wheelwright, again, Rich Dad Media Network. The dude is a machine. He basically just goes over, it sounds hilarious, but he makes taxes like somewhat kind of simple and very fun to like understand, because you'll discover that it's really the tax law is not about punishing people. It's a list of incentives. Like the government is trying to incentivize us to do certain things. So when we get taxed, you have in your 2-week paycheck, when you see the taxes come out, it's not that they're punishing you. You're just not able to utilize the same benefits that business owners, oil and natural gas guys and real estate guys get to participate in. So what he'll do is he breaks this thing down like so simple. Like, for example, my depreciation calculator on here, I stole this. You'll actually see this in this book. If you buy this book, I stole this from Tom Wheelwright. Like this exact, I wish I had it on me. I wish I had it today to show you guys. But this is a great book. It's kind of expensive. I wouldn't guess it would have been $42, but I think I bought it for 16 when I bought it originally. Yeah, look, this one's $20. So you can buy this one. But man, it is a really, really good book if you are just wanting to learn more about taxes. You'll have a different, not appreciation for the government, which sounds really crazy because I'm not really an Uncle Sam, but you'll have a different opinion on how the world works, because most people look at like, oh, it's not fair that the government taxes me so much, but really it's just all about incentives. Like it's all about incentives. And if you do the things that the government's asking you to do, you won't pay tax. Like that's why depreciation is the thing. That's why when you go and invest in oil and natural gas, they let you write off every single dollar. The first 15% of any income that you make from natural gas and oil is tax-free. I mean, the incentive is out the waz. So this is a great book. And like I said, this is a great podcast, Wealthability. If you haven't listened to or read it or heard about this Tom Wheelwright guy, like check him out. He's awesome. So any other thoughts or questions as we kind of get moving to close?
Hey, Nolan, I got a question for you.
Hit me, man.
Hey, so I'm Keone. I'm pretty new here as well, and as I'm getting through kind of the
Oh.
last couple of weeks of trainings and homeworks and stuff, man, I'm kind of talking to brokers and trying to introduce myself and get my
Yeah.
name out there, that kind of deal. And something that I've kind of noticed when I'm talking to brokers who don't really understand our game plan and kind of what we do, a lot of times the response to these brokers are, well, you know, seller financing, man, that's like 1% of the deals that we see, man. It's pretty rare. I don't know. And they kind of shoot down the idea from the get-go. So my question to you is just kind of how do you combat that? How do you respond to brokers that kind of have that mindset from the get-go when they respond to you initially?
Without being derogatory towards these guys, I just wouldn't call them back. You know, it's like the same thing. Maybe you know, I don't know if you're married or not. I don't know if you have children, not Keone, but you know, you as they would say, like you know, with contractors, with roofers, with your spouse, like you have to slay a couple of dragons to get to the princess. Meaning, you can't just you go on like one day and assume that that's going to be your wife forever. Maybe some people that happens, which is amazing. The first contractor you ever work with, they're still building houses for you. Like that kind of thing happens. I've discovered that the quicker that I can say no to them and move on, the more efficient I can be in my business. If they're not, because here's the thing, here's the reality. When a broker says something like that, what that just smells to me is zero creativity and zero ambition. Like they have no desire to try and get out of their comfort zone and to do something that might not fit into their normal little box of ways of doing something, you know, whatever. I like to work with younger guys. I don't know how old these guys are. Man, like my guy Sam, who again, y'all will be there, like Sam and my guy Sonny, they'll be there next week. They understand like creativity is the way to do deals. And if you got guys that just don't have an open mind, they're used to doing the status quo, they're just floating, man, I would like turn and run from those people because you're not going to grow as an investor with people that are trying to tell you you can't do something. Like that's bullshit. Like someone telling me I can't do something, I'm not into like motivation. I'm not like running through a wall. But man, if I'm told that, hey, you can't do something, I'm like, dude, I'll do anything that I want. This is my town. And you have that like oozing confidence that like I'll do whatever I want. And you're either with me or you're against me. I don't really care, but we're going to succeed whether you're with us or not. And if you want to party with us, this is the offer that I'm offering. And you either place it or I'm going to call up your competitor and I'm going to place it with him. And then see the type of response he has from there. Not in an arrogant sense, but just in a matter of fact, like I'm doing this, dude. Like, I don't really care your opinion because 1%. I mean, who just said something a second ago? Like Zane was talking about, we got a guy down in Florida that's just making offers. He's got a 12% deal, money in the deal. I mean, 12% cap rate. Like those deals are out there because we're just relentless with making ridiculous strategic offers that make sense for somebody that's motivated. So I get feisty when it comes to people like that or brokers that don't have any, you know, imagination or they don't have any creativity or go get, because man, those guys will just bring you down. Like I got to have energy. And when guys like don't have energy like that, man, I can't be around those types of people. Does that answer your question? I guess from not trying to be a football coach, but that's the way that.
Yeah, 100% it does. No, that's the sales pitch I was looking for. Awesome.
Yeah, I mean it's just, I mean, I'm all about that. Just let's go at it, man. Like I don't need the negativity. Like I want the positive. Let's go at it. You know.
Agreed.
So Nolan, do you think it's bad if you don't mention how you want to purchase these buildings to a new agent that you're working with? Because the way I thought about it is, I was kind of thinking the same way Keone was, like, if I try to explain this to an agent right off the bat, he's probably gonna be like, I don't want to work with this guy. I don't do things like that. So I'm just trying to get things in my pipeline. I'm just trying to get buildings to me. And if it'll work, we'll go over that hurdle when it comes about the financing. And then we'll explain to him how I want to purchase this, as long as I can just get the buildings into my email.
Yeah, I mean, there's two answers to that. I mean, again, I always kind of start with the foundation. Like we can't build a skyscraper without having a great foundation. And that when I say a foundation, I'm talking about assembling the right team, having the right guys on your team. But I also understand where you're coming from, thinking about, man, if I can just get into an offer, then I can go and position my creative finance. That's another key, and that's another thing you can do. you can make offers, traditional offers. And then once you tie the deal up, you go sit down with the seller and offer them to leave money in the deal. I've done that like 3 different times where I've tied it up traditionally. And then the seller, I positioned it to the seller. Like on that Jefferson building, I did that. I tied it up traditionally. And then I offered the seller to leave money in the deal later. And he's like, this is a no-brainer. So you can definitely do that. But I also think that it's important when you do work with these brokers and you're developing this relationship and friendship that they know that, hey, look, I'm not a hedge fund. I'm not out here. I don't have $1 billion in liquidity just sitting around in a Wells Fargo account. Like, the only way that we can do this is by borrowing money from local banks and getting creative with our terms. And if you're not wanting to tango with that, that's no big deal. I'm going to go to your competitor and we're going to do it. And he's going to make a lot more money than you off of me. And not in like, again, not in an arrogant sense or not of oh, well, I'm going to beat you, but just like, look, this is what I'm doing. This is the way that I make offers. And this is how I've purchased. This is how my team and I purchase property. This is how the fund that I work with purchases property. Like, you can use like creative words like that to give a little bit more validity to what you do. And that will lower the sales resistance. But you say, look, man, this is the way that my team and I purchase property. The group that I work with, we own over 200,000 square feet of light industrial real estate. This is what we do. And we've done it 100 different times with 100 different sellers. And it makes a lot of sense, because here's the thing. If you can show the broker that you're trying to help the seller save money in tax, you're actually trying to be a seller consultant, which is what I've said before, instead of you just buying a property, like, hey, look, forget the creative financing for a second. I'm trying to help the seller save money. When it's positioned that way as you being a martyr, the broker is going to be way more open-minded, because then that gives him a pitch to be able to work with that guy again and work with you again. So instead of thinking about just trying to get a deal done because it's creative, instead say, look, the seller guy, look, I'm focused on the seller. This is what our group does. We find solutions for sellers. We're solutions guys. We're solution guys. You can come up with a fancy little term for it, but like, we're a seller solution guys or something like that. And we're just trying to find ways to help sellers keep money in the circle versus giving it out to the government that goes into a black hole. We're trying to keep it here. And that's the reason why we make those creative offers. It has nothing to do with leaving money or the bank. It has everything to do with helping the seller and their family save money from Uncle Sam, right? Like some type of creative vocabulary that you can use that will help them, realize, oh, so that's why they're doing it. The why underneath like the reasoning or the what, So my thought from 30,000 feet at least.
So I've kind of got a question off that too. I've been talking with some brokers recently, and a lot of times they have so many questions about like who you are and what you're doing, and they start asking questions about the company, and like they're like, what's your capital stack? How much money are you trying to work with? What specific areas are you trying to get into? And I'll answer them as best I can, but then they go into like, well, why are you doing it this way? Why are you doing it that way? Like, how do you buy buildings? And I'll explain like the seller financing aspect as well. And then like one of them even almost laughed and was like, oh, so you're trying to like completely leverage this thing, like, yeah, right, kind of thing. Like, I never see that. And then, a couple of them even told me, I have deals in the pipeline that even fit that buy box, and I'll send them over to you. And then they just never do. I give them my email, I follow up with them, and they just never do. So do you kind of treat those brokers the same way that you do like an unmotivated seller? They're just like not trying to push a deal across the finish line, and you just move on from there? And then how do you kind of answer some more of those specific questions?
So yeah, that's a good one. I mean, it goes back to mentioning earlier. I just don't spend a lot of time with it's almost like if you've ever dated somebody and like, you're about to break up and you're still going to dinner, and it's like, it feels weird. You're like, okay, the vibe's off. I'm not, this is weird now. Yeah, we should just break up and move on. No biggie. It doesn't have to be necessarily like a big emotional breakup, but it's like, look, man, we're just not on the same page. And when you hear people say things like this, where they say, hey, I'm laughing at you because what a stupid offer or whatever. Remember, they're the ones working for a brokerage. They probably have a salary. Like they're the ones that are needing to sell something in order to make a living. So I'm always bamboozled when I hear people like that, and that's okay. But I just kind of Cherokee fade away. I kind of just break up with them, say, man, that's awesome. You keep doing what you're doing, dude. Like no hard feelings. We've got other things that we're working with. I got other brokers that we're working with. Because when I was playing college baseball, we always had we'd have scouts that would come into the clubhouse and like ask questions about, whatever, figuring out how we could, if I can get drafted. And we discovered is like, you don't have to have every team like you. You just have to have one draft you. Then you can become a professional athlete. So for me, I was trying to make every team happy so I can get the highest amount of money, but all I needed was one team to pick me in order to become a professional. So to answer your question with that, you don't have to have every one of these idiot brokers like you. They don't have to all act like, you're probably smarter than a lot of these guys too, believe it or not. Like, don't let them sell yourself short. Like these guys think they're all big and bad and they're smart, using word like capital stack. They're just some jabronis that went to college and they think that they know a couple of things because they read a book. Like literally, you're smarter than a lot of these guys. And you don't have to hang out with all these cats. Just find one or two guys that you can run with where you've got a friendship and you got a relationship where you can get a coffee with them and actually just like say, hey, like, what's your wife up to? How's she doing? Like your kids and stuff. Like it's more than just submitting offers. It's like a friendship kind of thing. And I've got that with like two guys, and it's taken me years to get there. But now it's like we have a friendship where they know exactly what I'm looking for. They know what types of property that I buy, and they know that I'm a creative maniac. And that style of, relationship is like, man, this is a perfect deal for Nolan because I know what the seller's up to. I know the type of property it is. It's going to fit right in his box. And I already know most of the time my broker, Sam, who y'all will meet, usually already calls the banker and sends everything out to him before he even sends it to me. It's like, this is a perfect deal for Nolan. Let's get all together for a coffee like tomorrow. So most of the time, the banker already knows the deal before he even calls me about it. Because he's like, this is a perfect deal for Nolan. A creative deal, blah, 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 blah. So what I'm getting at is like, don't get discouraged if you don't have a $16 million deal within 3 weeks because you got a couple of guys that think they're smarter than you. Like, that's not fair, Like, you're already doing it. You're pounding the pavement. Nobody else is doing what we're doing in this group. Like, seriously, nobody's doing this. And it just takes a little bit of courage and like tenacity to just stay in it and to keep moving, because you will find that guy. And once you close that first deal, he will worship the ground you walk on. All he will do is find the next deal for you. And the show will just go on. It will just keep going on. So, all right, I got to get moving, y'all. I got a 2 and a 9-month-old domestic terrorist at the house. So if you guys have some young ones, you might have experienced that already. So my wife is probably texting me like, where are you, you crazy man? So I really appreciate everyone getting on today. Do this kind of as we're finally walking out of here. If you guys have anything on your mind, questions, thoughts, anything for people that are coming in next week, or if you can't make it, whatever, we have another call, I believe, actually on Tuesday night for those that, if you can't make it to this one, awesome. If you can't make the next one, whatever. Text Zane or I if you got something on your mind, you got questions. We are always available. We are always on your team to help you guys get where you want to be. We believe in what we're doing. We believe in you guys, and we're just fired up about what we're creating. So anything's on your mind, just freaking holler at us. We're always available. Okay. So y'all have a great weekend. Holler at me if something changes, but I'm excited to see everybody next week that's coming to town. It's going to be awesome.
Thanks, Nolan.
Take care, fellas.
Awesome. Thanks, guys.
Thanks, guys.
See you guys next time. Thanks.